Good morning, everyone, and welcome to Weekly Profit Talk. As you would imagine, we do this every single week. That is at 8:30 a.m. Mountain Time, 7:30 if you're Pacific Coast, and 10:30 if you're Atlantic Coast. And we do this every single Wednesday. So welcome and good morning. This week's topic is unpacking the big, beautiful bills tax implications for doctors. Now, that's their name for it. That's not necessarily the way I think about it, but there are some things that can actually be helpful for the small business person. And by small business, I'm talking about Congress's interpretation now, which is under $31 million a year. So certainly all of my physician clients fall into that category. And hopefully you'll find this a little bit helpful. There may be some things you already know, some things you don't. Let's talk about it for a few minutes and just share the information. So without any further ado, why don't I go ahead and share this? Here we go. Okay. So the first biggie, we've all gotten used to the qualified business income deduction. Now, if you are one of my physicians that owns one practice and you've been making in excess of $500,000 a year, chances are this may look a little unfamiliar to you. There's that second line there. A qualified business income deduction is here to stay, but so are SSTBs. That is a specialized service trade or business. You and I are both in this, physicians, accountants, as well as architects, lawyers, and some other people. Specialized service trades or business have their qualified business income deduction limited by income. And now they are creating phase outs that are now more than they used to be. The phase out was $100,000 spread for married filing joint. They have increased that to 150. But the thing about this was, I don't know how much you know about tax reform. Back in 2018, the Tax Cuts and Jobs Act introduced qualified business income deduction as a temporary measure. The new bill that was signed into law on July 4th has actually made this permanent. But permanent with air quotes, meaning another Congress can come along and change that, certainly. So, but for now, that is a permanent part of the tax code. It is going to be remaining at 20%. If you saw something in the news about 23%, that was actually proposed in the House before they moved it over to the Senate. But they stripped that back down to 20. So that's where that is now. I've got a note down here at the bottom. If you are able to split operations between entities, it's possible that you are in the sort of specialty where you actually have to have a second practice entity or limited liability or professional liability company set up. If one of them is more lucrative than the other and is putting you outside of the qualified business income deduction, the way this works is that when I do your taxes for you, if you have another entity that's within the income threshold, you are still able to take it for that particular company. So there are some strategies that you can use to actually take advantage of at least some of this for your income. So let's go ahead and move on to capital investments. If you have been thinking about buying a big shiny piece of equipment to keep people from having to go out to a third-party vendor for specific kinds of testing. I'm thinking of good examples like orthopedic folks needing x-ray machines, that kind of thing. The bonus depreciation that was introduced back in 2018, that went down, I think, 80% in 2019 and then popped right back up to 100 for COVID. But it's been gradually decreasing, and it is in fact 40% for the first 18 days of January of 2025. Notice that this is back January 19th, 2025. What I'm able to see, and it's 900 pages long, and I look at that and go cross-eyed because there's so much in there that doesn't have anything to do with what I do for my people, that I do rely on executive summary type information as well as other sources of wisdom and knowledge. And I can't figure out anything about why they're doing January 19th. So if you place something into service on January 15th of this year, You can only bonus depreciate it to 40%. But if you waited until February, you can actually do up to 100%. Now, do you want to do that? You may. If you're having a really good year and you're scaling and your tax situation suddenly looks extremely frightening, then 100% bonus depreciation is going to look really good to you, because that means you can write off the entire cost of that asset. The limits for Section 179 deductions have also increased. So that is a second way to be able to write off all of your um, purchase cost of a large asset. There are certain codicils. Of course, you have to make more money than the amount that you spend. That's one thing. You also have to fall within those limits, but they have increased dramatically. I think the income limit now is $4 million. So if your income scaling this year, it might be the right time for a major equipment acquisition, especially now that we're in the middle of the year. You're certainly past January 19th. So that can be helpful. Certainly, I'll have at least a couple of people taking advantage of that this year. So R&D updates, don't have a lot of people that are actually this concerns, but I mention it just because it can be of some merit or helpfulness to you. These costs had to be amortized over a period of years. You now are able to deduct research and development. Of course, this is subject to certain limitations as well, but that can be of great benefit to people that have R&D expenses. So now let's talk about your individual income tax, because everything that you do flows through. Even if you're a corporation, you're still taking some kind of salary from it. So the tax bracket rates that topped out at 37% are now considered, and again with the air quotes, permanent at 37%. That's the highest point. They have increased that tax bracket, and I want to say it's something around the. In fact, I'm going to tell you what. I'm going to take a moment and look it up on another sheet here. Top tax bracket 2025. All right. Yeah, actually, that's what I was going to say. But it's about 751,600 is the top bracket for married filing joint. It is 626 if you're single. So if you make over that amount, 37% is it. If that sounds like a lot of money, it is. But tax brackets have been 50% in the past. So anyway, the TCJA, which is the 2017 Act, put into law in 2018, remains now at 37%. Now, SALT. This is going to be helpful for at least a couple of people that I work with. You have been limited to how much state and local tax that you can write off as an itemized deduction to just $10,000. They have increased that to $40,000. Now, the bad news is, boo, they've only put it into effect for 4 years. Why they made that a temporary increase, again, who knows? But I guess they're considering the future and the fact that the makeup of the Congress in terms of bipartisanship has a way of shifting in every 2 years. So who knows what the logic is? But for now, it is at $40,000. I know people for whom this is going to be extremely helpful, because that $10,000 was definitely a pretty hard speed limit for people with a home with a lot of property tax, for example. So child tax credit has increased from $2,000 to $2,200. That, of course, is subject to income limitations as well, which have not changed. So I believe if you make over $400,000, you're phased out of that. But for those of you that don't, and this is net income, net taxable income, I should say. So this is after your standard deduction, your qualified business income deduction, and other things. If your taxable income is under 400,000, then this can affect you positively, especially if you have a large family. So with that, here's some next steps, things that you can do this year. Take a look at your equipment purchase timeline. Were you thinking about getting something for your office? You do, of course, want to measure that against your revenues and expenses and staffing needs. I would say staffing and taxes are probably your two biggest things. So you, of course, want to keep an eye on those balls as they're rolling down the field. But if you're thinking about equipment purchase and you need something like this break with a bonus depreciation to help you make a decision, now's a good time to take a look at that. Evaluate your practice structure, especially those things that you may be doing that are not specialized service or trade or business activities. Um, the more you can put into that, the less you are limited by um, the income limitation for those things. And evaluate your income and expense timing strategies to optimize tax planning. That's kind of a no duh, but it's critical to do this sort of thing throughout the year. Taxes are not a one and done thing that you basically go like a trip to the dentist, dragging all your stuff to a CPA in March. And it's like, okay, what's the bad news? And you owe thousands and thousands of dollars. If you're doing taxes like that, you're doing them wrong. So if you are paying attention to your taxes year round, making good estimated tax payments, and you owe less than $1,000 in tax when you actually file your 1040, which is the ideal, you can do this. I know that you can do it with my help. I do this for a number of people already. So you can actually look forward to tax season as a time of joyful anticipation of getting solid metrics for the measurements of your business, as opposed to an ugly trip to the dentist that causes a lot of pain and suffering. So anyway, tax season is basically all year long. And by the way, the next estimated tax payment deadline is September 15th. There are 4 in the year. That would be the third one. And I would say that September and January's payments are the most important. So let's keep that in mind. And I'm certainly going to be beating on that drum in the next month because September 15th is less than 2 months away. So making good estimated tax payments keeps you in a situation where you're not only not owing half of your vacation savings account to get your taxes taken care of, but you're also actually saving yourself hundreds and even thousands of dollars in underpayment penalties. Yes, that's how the IRS enforces that. They don't stand over you and make you make the payments like they do with employees and employers and W-2 information, but what they do is they hit you in the wallet later. So let's not do that. They're already getting enough, and I'm no fan of the way they spend it. You shouldn't be either. So with that, I hope you're having an amazing day so far, and you're keeping cool in this July heat to the best of your ability. Have an amazing rest of the day. And if you have a chance, do something randomly kind for a stranger today. So with that, so long. Have a great rest of your week and an awesome weekend. And we will see you next week at 8:30 a.m. Mountain Time next Wednesday. So until then, so long, and bye for now.